Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame with the bearish scenario where we're looking for a 3-wave corrective structure, after which we expect continuation to the upside. In this scenario, wave A is a leading diagonal, a 5-wave structure, wave B a 3-wave zigzag to the upside, hitting a common target for B, which is the 886. Then we're looking for a wave C to the downside, which has to be an impulsive structure in 5 waves. The common target for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target between 54.6k and 50.5k. Preferably your wave C is also finishing after the 0.382 fib time, taken from the start of A to the end of A to the end of wave B, which is sitting on the 8th of June. On the lower time frames, we are then looking for bearish impulsive structures to the downside, and this leading diagonal is one of them, where we are looking for a wave 1, 2, a wave 3, a wave 4, and then a wave 5. After 5 waves, we then finish a bigger, higher degree wave 1, look for a retracement to the upside in a wave 2, and then a bigger move to the downside in a wave 3. In this scenario, the most common target area for your wave 3 is the 0.786 to the 0.886 trend-based fib extension, taken from the start to the end of 1 to the end of wave 2, giving you a target area between 66.1k and 65.5k. Preferably in this scenario, price is not touching the 1-to-1 at 64.9k. If it does, then the alternative bearish scenario is a wave 1, 2, 1, 2, and a bigger wave 3 to the downside. After wave 3, we want to look for a 3-wave structure to the upside in 4, and then a final 3-wave structure to the downside in 5. The invalidation of this scenario is price moving to the upside, taking out this high at 70.6k. On the lower time frames, the 1-hour chart, we are then looking for a 3-wave structure to the downside in that green wave 3, as I've just shown. Therefore, we have a wave A, B, and we look for a wave C to the downside here. Wave A being a 5-wave structure, 1, 2, 3, 4, 5, then a WXY complex structure in B, and a wave C to the downside. The common target area for your wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of X, which, as you can see at the moment, is respected. Wave W here is then a flat, wave X is a zigzag, and therefore we are in wave Y looking for either a triangle or a zigzag, but as you can see there's no triangle to be seen, so therefore a zigzag would have the highest probability in a wave A, B, and then a wave C. The most common target area for a wave C and then a wave A, B, and a wave C to the upside inside wave Y is the 1 to the 1.236, which as you can see is an area that we just missed out on hitting. A rare target, however, for wave C is the 0.618, which has been hit over here. After wave Y, we then look for C towards the downside, where the probabilities would increase if we take this low at 67.3k. Moving to the 4-hour time frame, your bullish scenario is a 5-wave impulsive structure, 1, 2, 3, 4, and looking for a move to the upside in a wave 5. The invalidation is price moving to the downside, touching 65.5k. If that happens, the probabilities will increase for more bearish scenarios. In wave 4, we are looking for a triangle, which I will show you in a second, and after that triangle, we aim for a wave 5 to the upside, where the common target for your wave 5 is between the 1.236 and the 0.618, which is between 73.3k and 75.8k. On the 1-hour time frame, we then look for this triangle over here, a 5-wave sideways structure, wave A, B, C, looking for D, and then a wave E to the downside, after which we then look for that wave 5 and continuation to the upside. In a triangle, 4 out of the 5 waves have to be simple zigzag structures, meaning a 5-3-5 ABC to the downside, or a 535 ABC to the upside. If one of the waves is not a simple zigzag to either the up or the downside, then it is by far most common for wave C or D to be a double or then a triple zigzag structure. And inside wave C, we count a double zigzag with a wave W, ABC, and then over here wave X, and then another ABC to the downside in a wave Y. The reason I highlighted this part of the chart is because wave C here has to be a more complex structure in a WXY, because your final leg here looks very much like a three-wave structure to the downside, but the high of your wave X was not the beginning of this move to the downside, as that was the high over here of your wave B. So therefore we have to label this a wave Y, which makes this a W and this a wave X. However, that also means that in this triangle, wave D and wave E have to be simple zigzag structures, ABC to the upside 535. Inside wave D, we then aim for a 5-3-5 wave structure, reaching the common target area for D, which is between the 786 and the 618, taken from the start to the end of wave C, giving you a target between 69K and 69.8K. The 05 is less common for a wave D at 68.6K, and the 886 is also less common at 70.1K. This triangle is invalidated if price moves to the downside, touching 66.5K, or moves to the upside without finishing wave E, hitting the high over here at 70.6K. On the lower time frame, we are then looking for an impulsive structure to the upside. Here we have a finished wave A, finished wave B, and preferably then look for a wave C to the upside and price moving impulsively with a finished wave 1 looking for 2 and then a 3 to the upside in a wave 1, 2, 3, 4 and then a wave 5 to finish wave C. Therefore wave D in the triangle, aim for wave E down and then continuation to the upside. The invalidation for this scenario is price moving to the downside, touching this low here at 67.3K. In wave C, we aim for a 5-wave move, wave 1 already finished, 1, 2, 3, 4, 5-wave structure, looking for a wave 2 to the downside. Common target for your wave 2 is between the 05 and the 786 Fibonacci, taken from the low to the high of wave 1, and the 886 is a rare target for wave 2 which has been hit on the chart. After wave 2, we do want to see a wave 3 towards the upside. If price touches the invalidation at 67.3K, the probabilities for bearish scenarios increase, and that is because for a bullish scenario, we then have to think about a flat in a wave A, B, and a wave C, or this wave A can move to the right here, but it doesn't really matter because wave B by all means hit the 1.618 Fibonacci taken from the high to the lowest point of your wave A, which is a rare target for wave B, and then a flat A, B, and then a wave C towards the downside, and after wave C you look for support and a move towards the upside. So just because wave B touched the 1.618, probabilities for this scenario have decreased. Also, that means that if you do get an impulsive move to the downside, lower probabilities for it to be a wave C, but it increases the probabilities the impulsive structure to the downside is a wave A or a wave 1, which increases the probabilities for then continuation to the downside. What also impacts the probabilities of this scenario is that your wave B is very long compared to your wave A, or your wave A is very long compared to your wave B, and your whole structure ABC is going to be very long compared to your wave A here, which reduces the probabilities if price takes this low at 67.3K. And if we then look at the probabilities of the different scenarios, then 68.1K was hit with this move towards the upside as explained in previous videos. That then means that an impulse to the downside in wave 1, 2, 3, 4, 5 is invalidated. However, we still got the potential bearish WXY, where inside wave Y you then have an ABC towards the upside. Wave C inside wave Y, however, didn't hit the common target area, which is between the 1 and the 1.236 as explained, so that is positive for the bulls and might increase some probabilities for the bulls. However, for wave 2, which is this move to the downside here, we want to see a corrective structure to the downside. Currently, it moves down impulsively, so from an Elliott wave point of view locally over here, waiting for some local proof of support is very important and something to keep in mind. If price can move towards the upside and hits 69.5k, then the probabilities will increase even more for the bullish scenarios. If price takes out this low at 67.3k, it will increase some probabilities for the bearish scenarios, because a flat in an A, B, C and then continuation to the upside has lower probabilities because wave B touched the 1.618 Fibonacci, which lowers the probabilities that the impulsive move to the downside here is a wave C, but it increases probabilities this move down is a wave A or a wave 1, which increases the probabilities to move to the downside. If price also hits 66.6k, this low over here, the probabilities again increase even more for the bearish scenarios, as then a triangle becomes invalidated. In a triangle, you don't want price to move below the low of wave C. If price also hits 65.5k, which is this high over here, then the probabilities are very high for the bearish scenario, as that is an invalidation for a wave 4 in an impulse, 1, 2, 3, 4, looking for a 5 to the upside. The current resistance on the chart is the daily and the point of control between 68.3k and 68.5k, as you can see over here. We rejected at the daily at 68.3k. If price can pass this resistance and potentially retest it nicely, then we can continue to look towards the upside towards that daily naked point of control at 69.6k. The support to the downside is at 67.2k, which is the monthly naked point of control. Break this level and the probabilities for bearish scenarios will increase. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.